Are you 65 or older? If so, when was the last time you had your life insurance reviewed? Have you ever thought about whether you should retain it or continue making premium payments? What about surrendering it for the cash value or perhaps selling the policy? Yes, there could be a market for your policy, and it may be worth a lot more than you realized. Whether your policy is convertible term, fixed universal life, or whole life, it has value that you may not be aware of. To find out what is financially best for you, along with income and tax consequences, you should get an unbiased evaluation. Whether you're a business, charity, or individual, it is in your best interest to find out the options that are available to you. Contact Pinnacle IFS and the Asher Group for a no-cost evaluation and let them show you how you can unlock the value that your insurance policy could be providing for you right now. To learn more, go to www.ashergroup.com or call Pinnacle Group's VP of Sales, Art Scevola, at 503-720-2687. Or find more information at www.pinnacleifs.com.
Hello, David Moore with Equity Advantage and IRA Advantage, and we are blessed to have Art Scevola here. He's Senior Vice President with the Pinnacle Group, and we're going to do one of our Ask the Experts today. And Art, why don't you tell us a little bit about what you've got going on? I know it's life settlements, and we're actually, you spoke this morning. I had a great presentation webinar this morning, and it was all on end games, basically, where you're going to go. You're tired of property, where you want to go with it.
Yeah.
But I think, with COVID and everything else that's going on, I think we're in a situation where lots of people are maybe looking for hidden money. So
yeah, that's a good thing.
So with the COVID stuff, we had some extensions, some things happened, some relief with respect to getting money out of retirement accounts. And I know that we've got clients that have property that have had some issues maybe with tenants not paying. And
right.
Maybe you haven't been working, maybe you just are looking for some funds to live a better life, and you might have hidden money elsewhere.
Yep.
So Art, that's what you're here for, is
right.
to help us unlock some money, whether it's something that's to help in life or to help save an asset that might be failing.
Right.
But why don't you tell us a little bit about what you do and
Well, I'll do that, and happily. Today we're in an environment where people, for a variety of reasons, need to consider all of their assets in order to maintain either their business, their charity, or their own individual lifestyle. And if you're in one of those categories, you probably are, you're going to want to really consider this particular strategy. And the strategy is widely known as life settlements, and it's been around for at least almost 30 years, but in its present form, probably most matured in the last 15 or 20.
So Art, I interrupt you there a little bit, but I think a lot of people out there have probably seen the ads on TV. You watch it, you see, there's a couple firms that are always running ads. Probably heard them on the radio too.
Right.
So maybe you've heard about this process, but you don't really know anything about it or how it's going to fit.
Right.
But
right. They've done us a good favor in educating the public. But clearly, I won't disparage anybody, but there is a process, just as though it was a process if you had anything that you felt that was of value and you went and sold it to the very first bidder. That's what the process that we don't want for people who have life insurance that has value. This is a huge opportunity in America. The slide that we'll have here in a while to show indicates that value, and it's really for people over 65 years of age that have life insurance. Now, they could be insured by a business, or a charity could be the holder of the life insurance, okay. David. So it's an individual owner, it's a charitable owner, or a business owner,
all right,
wherein the value of that life insurance policy is up for being measured, which it should be anyway, but to measure that value as to whether to keep, disband, or lapse, or sell. Now, the last strategy, sell, is something that has escaped a lot of people's attention, and thus a lot of money has been forfeited by that audience.
So historically, what you're saying is people get to a point where maybe they don't need the policy anymore, or maybe they can't afford to pay the policy anymore. I know in my own experience, we had family members getting older, and we had policies in place to take care of the estate planning, the estate taxes, all that. But those policies get so expensive to maintain as people get older, and it's really tough. And I think so often people just let them lapse. But this is a much more attractive thing potentially for someone.
Right.
If they could, instead of letting it lapse.
Right. Because one of the things that I think is important to recognize is just how wide-reaching this particular market actually is for people who have relatives of the age group who are either themselves in that age category, and how much has been being lost by not evaluating at a critical time what their actual value to their life insurance is. And therefore, our service is designed to simply expose that for people, businesses, or charities. And I think it's critical in today's environment when money is tight in many respects for people who have experienced loss of jobs, loss of assets, for whatever reason, to consider this being a source.
Well, and I think it's, like you said, it's been around for a long time. People just aren't aware of it. So I think there's lots of little things out there that are well-kept secrets.
Yep.
And you wonder why. I mean, our self-directed IRAs and 401k plans, for example, have been possible since the inception of retirement accounts, and yet so many people have no understanding of what you can and can't do, or they've been told they can't do these things. So I guess the point we want to make is this is not something that's new. It's not risky. It's something that actually we talked about it. It's sort of evolved a lot over the years because, I mean, imagine if somebody just, you were able to sell somebody's policy and you got that sale to somebody that was maybe unsavory, right? In the old days, you could have somebody buy a policy and take the person out, right?
That was the AIDS environment, which gave birth to what they were called at the time, which was viaticals.
Okay.
But since 98, 99, that whole market, of course, went away with the medication. But the new market has been a result directly of a lot of people holding universal lifestyle policies and term policies, which have very little value ultimately if they're not properly maintained, or no value in the case of term insurance. And as the example I would just share here from what's on my screen, a $2 million, for example, David, convertible term policy on a 74-year-old male brought $630,000 to the hospital by simply them selling the policy in the life settlement market.
Wow.
This is a multiplier of wealth for people. And the question is, what is the need? The example I give is, why not find out?
Yeah.
Because if you have anything at all on people of that age and you're not evaluating it, it's pretty easy to just completely bypass what it could be worth. Now, if you need the life insurance, and I want to make an example of that, if there's a reason that needs to continue, I am not here saying get rid of your life insurance.
Yes.
I'm saying where that need has either, one, gone away, or two, the cost of maintaining has gotten way out of hand for you, that this is a process that you should undertake, because otherwise, how do you know? You're just taking a face value from an insurance company whose interest it is for you not to be a claim.
Yeah, I see that. I mean, to your point, I mean, you've got the people that need it, the people that don't know it's possible, the people that can't afford to keep it.
Right.
And then you're looking at people just want to maybe use it to diversify that policy, whether it's a buy, sell, or key man policy, or whatever it is. That purpose for the policy to exist no longer exists.
Yep.
And now you've got something that's there that historically might have just been let lapse.
Yep.
And you can actually turn it into something and benefit and use it. And
that example, you mentioned, I'll bring in, one of the big examples are businesses that executives that have retired or are retiring and no longer want to keep that life insurance that had been on them with the company payment or whatever. They don't need it, they don't want it, and the company just lets it go. And there's millions and millions of dollars of value that just gets flushed, worth nothing when that happens, or at best it gets the cash value of the policy back to the company. So the process we're talking about gets maximum value in a bid circumstance, which is the company that you see on this program today that I am partnered with. They are associates of which we do lots of business all over the country in order to bring the understanding to the client base that you have and others have, whether they be lawyers, CPAs, real estate people, whatever it may be. Everybody knows somebody who's of an age that may be a candidate for evaluation. Not necessarily a sale, but at least an evaluation.
Interesting. I was just thinking, you think about the different uses for this stuff, and I think about, we're in a situation where, we just had an election. I don't know when we're going to know who actually won it, and then obviously, depending on who won it, we're going to be in a situation where a lot of my clients, honestly, if Biden's certified and ends up president, we're looking at proposals with everything from elimination of the stepped-up basis, doubling of capital gains taxes, elimination of 1031 or great reduction in what it's going to be applied to. But I was just thinking, about the life policies and estate taxes too. I mean, obviously, if you're the person that's got the policy and it's your estate that's to be protected, you're going to have a situation there. But maybe you've got a situation where if the stepped-up base goes away and you have that event happen, you might not be that person that's passed away. You might be the person inheriting the stuff and is trying to save the estate from the estate taxes, and I could see that as something that's there. Mm-hmm. So I'm thinking, well, a stepped-up basis elimination is going to hurt me a lot. I mean, I'm not going to like it, but as far as you're concerned, that might be a profit maker. It might be a business builder for you. But. Well,
there is a certain, let's face it, there's an appetite in this country right now in the political winds that is for increased taxation at every level. Let's assume, for example, that the estate tax goes down from 5+ exempt to back to the old days. What happens to people's wealth? They're exposed. In the cases of businesses where there may be, as David, you're pointing out, tax-free interchange of dollars or assets, and suddenly they're no longer there. So I'm suggesting that every one of our clients and your clients who have the if you will, of the range of age that this is appropriate for, undertake to look at the life insurance as, and as my screen here I share, is called life insurance is an asset. First and foremost, you're not dead. It's an asset.
Yes.
What's it worth, just as though you were looking at any other asset in your portfolio? You need to have it valued. It's valued at its face amount when you die, but guess what? You're not here to know whether it was good, bad, or indifferent at that point. But now you can actually have an outlet for something that has value beyond what the company is sending you on the statement every year in many instances, and convert it to something that you need today.
And a lot of those policies just have a conversion number there that's there if you want to give it up, right?
Absolutely.
So once again, we've got Art Scevola here today, and he's with the Pinnacle Group, and we're talking about life insurance contracts, what your policies, what can actually be done with them. And using them, it's an asset. So use that asset. Don't just let it go if it's not needed anymore. But Art, as far as this whole process, we've discussed, it's not a new process. It's been around for a long time.
Right.
But how does it really work? I mean, what happens if I've got if I've got a policy and I'm interested in doing something with it? Mm-hmm. Number one. How do I know whether it's going to fit my needs? And
That's a great question. The process really is developed around a gathering of information about the policy, information about the individual who is insured. So let's be honest, there's nothing out here that's being done new when it comes to that. It's already available information. So the company has its record that you can secure. You have your own medical records. There are no requirements for any kind of exam, anybody having to draw blood, stick a needle in you, whatever. None of that has to happen to get an evaluation. What the process then means is that if your policy is a good candidate for offers, then it's going to go into a bidding process. That's where it departs from what you see on the television ads.
So if somebody's curious about this, though, and they don't, a lot of times these days, people email you something, they'll text something, and say you really don't want to divulge a lot of information. You're just sort of trying to figure out whether or not it fits their needs or they're a candidate for it. I think earlier you mentioned that there's some type of quiz that somebody can take, and that's a pretty simple way to see whether or not you're a candidate for this.
That's an excellent point, David. We have, through my relationship with Asher, they have developed a quiz, and the quiz itself is called the Life Insurance Policy Value Quiz. And it takes into account about 4 categories: age and gender, medical condition, again, not new evaluation, just a conditional statement, smoking or not, policy type, whether it be universal life, whether it be whole life, whether it be term insurance, and then a current cash surrender value number that you're acquiring typically from your statement if it's a cash building kind of a contract. Once that information has been secured and there's a value associated with those answers, then the category that you fall into will determine whether it makes any sense to go forward and have an evaluation. And that's something we would provide to anybody that wanted to look at it through my affiliation with Asher. It's the Life Insurance Policy Value Quiz. Real simple, clean. It's a one-page thing, and you can do this in a matter of time that makes sense if there are such policies out there.
So once again, anybody that's interested in sort of seeing whether this would apply to their situation or what they've got to see if it's worth anything,
right,
they can start off by contacting you, going through this little quiz before they have to go dig through a whole bunch of information, get it out.
Absolutely.
But then if the quiz says, hey, yeah, you might fit in this scenario, what's the next step? What's
Good
the process of this?
Yeah. Once this is determined to be a product that would attract bids that are in excess of the current value.
And who are making these bids?
These bids are the largest capital organizations in the world that have money.
So once again, I want to sort of go back to what I was joking about earlier. You can't have Guido buy the thing. So the buyers, this is well regulated. And
these are people like Deutsche Bank, to name one, several of the U.S. large capital companies, even the companies that you might not think, gosh, why would they want to do that? And the reason I'm glad you brought up is that this is a non-correlated with the marketplace asset for them. And I don't want to get into the weeds, but when a company buys a life insurance policy, they are penciling it out on basis of expectancy and return, and they're coming back and saying, we need to hit a benchmark, and if that benchmark for them is 6 or 7%, that's a whole lot better than Treasury paper right now, isn't it? Yeah. So I guess the question that you're asking, though, is the next step.
Yes.
And the next step is that there's a formal process by which the policy values of the existing policy, the medical records of the insured, are accessed. This costs the individual nothing to do. And once that's put together, that forms the basis for what will then be a bidding process. So all of these, if you will, capital companies that have money looking for policies, and there are lots of it, then go into we're looking at this file, we'll give you X, the next one comes in, we'll give you X plus Y, and so on and so forth, until you reach sort of the highest end of the bidding, and then that is the offer that the client can act upon or not. Okay. And the client is the purchaser, right?
Yep.
I'm sorry, is the seller.
The seller, yes.
And that's the seller is an individual, a trust, a charity, or a business.
Yeah.
And it could be any one of those, and is any one of those. In every day-to-day work with Asher, they are vetting hundreds of millions of face amount policies around the country. And I would tell you that The example is worth your time to at least have a chance to look at what you have and its worth. Because most of the time, if my policy has been in place for 15 or 20 years, if I'm getting dividends and I have my cash secure inside of it, haven't borrowed it all out, okay, chances are you need to keep that policy. That's a good policy. It's going to continue for you doing the job that it was intended to do.
Yes.
But if you have guaranteed universal life, where the face amount is absolutely guaranteed, no matter what the cash is, that's not bad, but that's worth a lot to you to consider the alternative. If you have universal life, which has not acquired enough value to sustain itself, and you're paying on it, and you may have to pay more because carriers have brought interest rates quite a bit down to the guaranteed level, then that's a type of an evaluation that, and for all reasons that I mentioned all along, nobody knows this, but term insurance that can be converted, and that's the key word, that has a conversion right at some point, is worth a lot of money if you vet it out at that age.
So read the fine print.
Yeah, that's a good point. You better know whether you have a conversion privilege. If you're 65 and older and the business is the holder, which often it is, that could be worth thousands of dollars back to the business.
Interesting.
Yeah.
How long does it take to do this? I mean, typically from the first conversation to
get bids going?
Well, yeah.
Or,
I mean, what's the typical sale?
Or the sales cycle, the whole cycle?
Yeah, full cycle.
I'd say I would always think of this as a 30 to 60 day cycle.
Got it.
Yeah, 60 on the long end if everything is provided and coming in on schedule. You know, you can't ever depend on medical records are always the bane of the life insurance business, getting those records sometimes. But again, the client isn't paying anything for the process.
So are there any tax ramifications of this?
Great question. There is a tax ramification, as in any capital asset, that starts with giving you back your basis, which in this instance would be all your premiums on a totally tax-free basis. Then you have a segment, depending on the offer, that would represent capital gain, and then there would be an amount beyond that, if there were, that would represent ordinary income.
Got it.
So it's a three-tiered payout as far as exposed to taxes. And you can't get around that unless you're, again, if you're a nonprofit selling it, there are no taxes. And a lot of nonprofits, I'm just going to say, need to take out that portfolio that they may be either owning or paying for today, and make sure that it's going to last and do the job that was intended for.
Yeah. So once again, I think what's critical is I always say you've got to have your team of advisors, and definitely when you're talking about anything in the real estate world and the retirement world, and I think in this space too. I mean, you got to have good tax people, not somebody who's preparing a tax return for you, but people that you engage before the year's end and look at what's going on and see if they've got any solutions for you, any opportunities there. But when you're engaging, Art on something like this, you need to talk to the tax people and let them know you're thinking about it, and make sure if they've got questions, it's taken care of too. I just have so often I've got to bring that up and really stress that, because we have so many people that don't talk to their tax people until April 14th, right?
Yeah.
And the tax people can't do anything at that time. So get good people and use them. And there's so much out there. I mean, if I think back, I mean, I've been handling exchanges for 30 years. That code's, almost 100 years old and perpetually vulnerable, it seems like. I look at my IRA business, and it's a dozen years old, but IRAs have been around for since the mid 70s. The rules have never changed, and everyone acts like self-directed accounts are some new concept. It's a wild west frontier, and it's not. It's been there forever. So this is another topic that's been possible for a long time, but it's now gaining more press. And
absolutely,
and I think it's a lot of it. We talked earlier, Art, about just. You put money in the bank today, what do you make on it? Nothing. People are forced into, in today's world, for the most part, to throw their money in Wall Street and bet that something's going to go up. But meanwhile, in your life, you've got other things. I mean, you used to have a savings account. You can't afford to have one anymore.
You got to pay them.
Banks don't have work like banks anymore, so that they don't pay anything. So you've got to look at everything you've got and understand you've got this pool of assets, whatever it might be, and what we're talking about today is life policy, life contracts, and what they're good for before you die, really.
Exactly.
I mean, right?
Yep. Whether or not
Yeah.
it's to your advantage to take dollars out today and deploy them for your own reasons, not the company's reasons, and then decide if that measurement is better for you than waiting to pass that policy on upon your death and maintaining that policy all the way until that event. In no way am I disparaging the notion where life insurance plays a valuable role. What I am disparaging is that, for the most part, insurance carriers are not real happy when they know they're going to pay a claim. And long term, they're going to pay a claim on a life settlement. So that's why they're not all excited about life settlements at the major companies.
They prefer it just
That's
goes
right.
away.
You, as the consumer, however, have every reason to bring your advisor to the table. We're very, very comfortable in our team with putting together webinars, any kind of Zoom nowadays, anything that would enlighten the advisor group. And many of them are just coming to the understanding about this particular tool. I mentioned one to you a while ago that will be something else in the toolkit for the right client. And it might be 1 out of 100, but for that one, it's like the old story, for the sand dollar.
Yeah.
For that one that got picked up, that's a pretty important day, right?
Definitely. So if somebody's interested
thrown
in
back,
this,
I should say.
yeah.
Right?
So if somebody's interested in looking at whether this is something that they'd be interested in doing ultimately, the first thing they're going to do, engage you, going to go through their quiz.
Right.
And then if that quiz says, hey, you're somebody that fits this scenario well, and it's something that you ought to look further at that point they're going to fill out, like you said, some paperwork. You're going to look at a variety of different things.
Maybe we can point at the quiz.
And then as far as what goes from there, we're just then it goes to bid, right?
Yeah. Then it goes into a process that says, okay, there's some formal paperwork that entitles us to go out and get your medical records, A. B, to get from the insurance company a direct current illustration. And this is really key. The buyers today want to see what the policy costs will be for it to last be well beyond your life expectancy. Typically, they price out at age 100 or even age 105 and say, this will be our cost if we buy your policy. Okay? We're also going to have to make sure that we pay for the cash value and then our expenses in getting this done. So when you do a settlement, all those elements mathematically come into play to come up with a bid that you then decide yourself as the seller, okay, I want that or I don't. If the seller says I want it, then that bid is executed. Everybody involved, and this is another thing, it's really a very, very high disclosure business. Anybody that has anything to do with your life insurance policy must be in the awares and typically even signing off on if there's any kind of beneficiary on a relationship. So it's a very above board business now. Nothing even close to what it once started as, or I wouldn't be in it.
Yeah.
So I'm saying that it's just a great way to add value in situations that we're describing here. But I think the biggest reason today is what you've seen and said. People are under a lot of pressure today in business. The charities, are under a lot of pressure to keep donations. You and I belong to one of the larger ones in the country that we participate in with Rotary. And all these places have policies that have either, one, been donated to them, in which case they're responsible for keeping them up, or in which, let's say, I just named them my beneficiary to a certain extent, and I'm responsible, and I might say, I don't think I better pay that money out anymore. I can't afford it. And whatever the charity knows of that is nothing. So the chances are good that the charity has a really high vested interest today, more than other times perhaps, but in evaluating that portfolio they may be having either pledged to them or that they actually own. And I just would like to offer that service because I'm highly capable. I'm highly confident of the group that I'm working with because of their reputation nationally, that we would deliver great value to any charity or individual business, whatever that may be.
So I just want to stress for the people out there that it sounds, I mean, as far as this process, as far as you checking out what your policies were, so on and so forth, there's absolutely no commitment to sell anything until you decide to. So
That's right.
If you're interested in this process, I would encourage you to probably take a look at it and see what your policy's worth. I mean, we're always looking at our life and the assets we have. You made the comment, this is an asset. It is an asset.
Right.
And what's the highest, best use for that asset at this point in time? The funds that are there. And once again, we're just looking at a way to unlock funds that are there and to be used as they are most beneficial to the taxpayer.
That's right.
Today, rather than I mean, hey, like the old people work, retire and drop, right? I mean, you don't want to have all this stuff saved up.
Yeah.
The old armored car following the hearse, right? So,
right.
So the idea is use what you got, and I'm just my real motivation to get Art in at this point in time was I think it's a timely conversation. And I think that I know I've got clients in situations right now where I've been dealing with the calls. We are very busy in the exchange biz right now because people are trying to get stuff moved before the tax rates go up or before the code goes away, and there's lots of concern out there.
Right.
And I know that we've got lots of our clients. People are trying to close deals this year. People are concerned about what's going on next year. And people are just concerned about having the money to carry stuff. And, I think this is a real good place to find some money if you need it. And you've got a different use for it. And it's one that's not well known.
It's a hidden liquidity strategy.
Yeah.
I mean, I know that in everybody in financial planning out there in your world or mine has, number one, always emphasized the importance of liquidity. The thing that's happening with life insurance policies with settlements for older people, whose policies fit the profile, is it's a new source of liquidity that most of them never knew that they had. Sure, I can borrow on my cash value, and the insurance company is happy to charge me 4 or 5% to carry that.
Yes.
But I got to tell you, when you can get a multiple of your cash value, take it out, pay some taxes, and walk away with it, if you didn't need to provide somebody that death benefit, or it was no longer relevant because it was a business that didn't need it, or you were gone, this strategy really is something that will help you. And that's what it's about.
So Art, we've talked about who might be able to use this. We've talked about the quiz. We've talked about the 30, 60 days time that it takes, who's buying it, so on and so forth. Why don't you give us a success story? Give us a real life example of somebody that's done this and just sort of go through the numbers so people can understand. I mean, the person has the ability to just walk away or sell the policy.
Sure. Well, we have a couple of quick things here. One is here's a business owner. This man had a policy and he was leaving the business, and it would have had to have been converted to something permanent since it was a term policy.
I would look at, today's world. I just walked through our building. We've got lots of empty offices that used to be businesses.
Right.
So, I could see this scenario applying
and
to
you can
a
imagine,
fair group of people today.
You can imagine what difference that made in this life when he was able to convert a policy that had no value, term policy, by selling it to a cash payment of $750,000. Now, that was after 18 bids. It didn't happen one bid.
So this is a person that was in the business and business is no longer there, and they're looking at a policy that's no longer needed, and if they just surrender it, it gets
the company owned the company
owns it. The company's going away.
Right.
You got a bagel if you just surrender it, right? Or
well, this was a company-owned policy with an individual who was departing, and the company did not need that coverage. They had no right,
that
really.
Person any longer.
And so they were going to simply throw it in the out file and be worth nothing. And the vetting process got them $750,000 on this particular individual having a policy on his life that could be converted And it was a large policy, so this is a business owner, executive level person. It was a $5 million policy to get that much. Now, the second quick story here is a really older person who's up against the COVID, and the money that had to come out for the care and all of everything to do with the draining of resources from the families, everything to protect this woman. Her name was Teresa. And the example, this is even shocking to me, an age 92-year-old female with $350,000 of universal life that had been run down to a value of only $6,000 of value left because nobody was able to continue paying for it. The settlement value after 21 bids was $167,000.
Wow.
And that's probably the lifesaver for that family because of all the money and expenses they'd been enduring for this 92-year-old who had, the disease.
So, I'm on the board for the, Cancer Resource Fund, and we've got a series of events raising money for that. But Candlelighter's one of our biggest beneficiaries, as is Candlelighters for Rotary, for our club, right?
Yeah.
And you think about the cost and the financial hardship to the family when somebody gets cancer. I mean, and it's a similar situation. So, I can definitely see the application for a lot of people. But the bottom line is, this is an opportunity to, help somebody today. And it's something that's just not out there that much. So
well, I'll make this success story slide available so we can send that to anybody that says they want some examples, because I got 3 or 4 more not to take the time of right now. But the multiples for people whose policies have either been depleted or never been paid sufficiently are substantial, even on older ages.
Is there, you've got to have some type of figure on what percentage of policies just are allowed to lapse at some point.
It's
what
huge.
Percentage of policies sold end up just lapsing?
Well, that was in our first slide. It said $112 billion forfeited annually by seniors 65 and older.
Wow.
$112 billion. Well, we know who the winner is on those. And it isn't the individual policy insured, it's the insurance company. They didn't have to pay any claims on $112 billion of value.
Wow.
So, anyway, this is a real opportunity that we can try to help people when we can, and welcome the chance to do that with your associates and clients.
Once again, David Moore with Equity Advantage, IRA Advantage, and this has been one of our Ask the Experts editions. And if you've got information that you'd like to know more on some topic, please don't hesitate to reach out to CMoore, CMOORE at 1031exchange.com, and we'll do our best to provide content on what you've got questions for. Once again, thank you, Art. It's been a pleasure to have you here. It's
Thanks,
been a great
David.
friend. I've known Art for, 25 years probably. Been in Rotary. Time flies when you're having fun, right?
Especially in the pandemic.
I think we both had a lot more hair when we started that. You've got more hair right now, but any hair is good hair. But anyway, my best of health to everybody out there, and happy holidays. Art, you got anything you'd like to add before we sign off?
Just thanks for tuning in today, and it's been a great pleasure to share this message with you, and thanks to David, and let us know if we can be of any help. Thanks so much.
Thank you. All my best. Bye-bye.